slide, as I mentioned, the labor market ended the year on a pretty healthy note. Job growth picked up in December. We, at least for a time, had a pickup in job openings. But there's still some elements of weakness here. There's still some signs of weakness here in the labor market. So here we're looking at the median duration of unemployment, and you can see it ticking up on the far right-hand side of the page in recent months. This chart, we decided to go back a little bit further into time just to show the long-term historical trend, to show that we generally don't see the duration of unemployment rising until we get into a recession and then in a post-recession period. The duration of unemployment is actually a lagging indicator. We generally don't see it rising before the economy, not much, before the economy goes into a downturn. But here it's up by over 2 weeks just in the last couple of years. That's a pretty big increase over the course of a few years. And this is something we typically don't see in an expansion, or the only times we do see it in expansions are in the very early stages just coming out of recessions. This is a sign of stagnation. This is a sign that beneath the surface, we're still seeing 200,000 plus jobs created per month, at least in recent months. We're still seeing very low levels of jobless claims. But beneath the surface, we're seeing some signs of deterioration in the labor market. This jibes with the decline we've had in recent years in job openings. It jibes with the weakness in consumer sentiment on the labor market. We just had a report this morning on consumer confidence showing that in January, consumers felt that jobs were less plentiful, were harder to get. So sentiment on the labor market is deteriorating. So beneath the surface, we're seeing some signs that the labor market is stagnating here, is weakening, and is not quite as strong as these headline numbers would suggest. These trends are hinting that job growth is going to weaken as we go through 2025. And again, that's another factor that should lead the Fed to eventually resume its easing cycle.
To watch this month's complete analysis and receive daily updates directly to your inbox, become a member at cycleframework.com.